Welcome to Bloomberg Technology. I'm Emily Chang, live from Apple Park in Cupertino, California, Apple's brand new headquarters with what else but Apple earnings. I just got out of an in-person meeting with Apple CEO Tim Cook. I will bring you highlights from that momentarily, but let's dig into the numbers. Apple selling 77.3 million iPhones in the quarter, slightly below estimates. The average selling price of an iPhone, $796. Still, the company hitting an all-time revenue record, $88.3 billion. I want to bring in our Bloomberg editor-at-large, Corey Johnson in New York, and Julie Osk, Forrester research analyst in San Francisco. I want to start, guys, with a quote from Tim Cook from our meeting. Of course, there's been a lot of concern about how well the iPhone X is selling. He told me iPhone X was the most popular smartphone we launched since November. Every week, it has been the top-selling iPhone in the world. I couldn't be prouder. Julie, what's your takeaway on the iPhone number?
Yeah, no, it sounds absolutely solid to me. I think certainly when you look at a device like this, it's incredibly sophisticated. It's got a bit of a higher price point. And certainly when you consider that the replacement cycles for consumers are slowing, I think it's a very strong number. And while people like to talk about and point to the high price point as maybe something that's deterred consumers from upgrading, you also have to keep in mind that as a part of the total cost of service, the hardware isn't the biggest chunk, it's the service.
We also talked about the performance of the iPhone X in China. There's been concern that the price was too high. And when I asked Cook about that, he told me in China, the top 5 selling smartphones, every one was an iPhone. It's the same situation in the U.S. In Japan, the top 6 out of 7 smartphones are iPhones. So not bad, he said. I feel great about that. Corey, what do you make of these numbers, given all of this fuss over whether this iPhone X was simply too expensive?
Well, I think the numbers show that it wasn't too expensive. I mean, at least, well, there's a lot of different ways to look at this. Apple made a lot of money selling a really expensive phone. They're clearly defensive about what we're hearing about a slowdown, what we got out of Qualcomm yesterday, about the fact that unit sales on a year-over-year basis were down, even though this phone is a technological marvel. But I think that Julie's point is a really, really important one, and it can't be overestimated. Looking not at the competitive world, but just at Apple itself, that Apple's trying to move its financial model towards a service model and away from being purely about hardware. And so that the introduction of new hardware isn't about the hardware itself. It's the Trojan horse to services that customers will pay for over time. And so over time, what we have to evaluate is not just how well the phone sells, how many Trojan horses get out there, but their ability to pull along other revenues over time. And I think as a result, that's just going to take a little bit longer. We didn't know when the iPhone launched that Uber and Instagram would be invented and become the killer apps for this device of a smartphone and of the iPhone. So we might not know in the first 15 weeks or so of the existence of the iPhone X what the killer app is, but it might. But Apple's stated goal is that it'll be an Apple app, and that the next Uber and the next Instagram won't be created by somebody else, but it'll be owned by an Apple profit through the services aspect, not just the hardware sales.
Now, I also did ask Tim Cook about so-called battery gate. Bloomberg has reported that the Department of Justice, the SEC, are asking questions about this whole iPhone battery replacement issue. He couldn't comment on the specific agencies, but said that there are agencies around the world asking questions, and they are cooperating with that. He also singled out the Apple Watch and how quickly that is growing, that this category would be the size of a Fortune 300 company on its own. Julie, how optimistic are you about the non-iPhone products in the portfolio?
Yeah, so I think this builds on the point that Corey was making that's dead on. There's a couple things that are really key as we look forward around Apple's success. And one of them, as Corey pointed out, is the services, right? That makes these devices more valuable. And the second thing is the more devices that a consumer owns within the Apple ecosystem of products, then it's more valuable that each of these products become, and more likely that Apple's going to be able to sell services like music, payments will become embedded into my day-to-day life and things like that. So both of those things are really important as we think about Apple's momentum going forward.
Of course, we know that Apple is now bringing billions and billions of dollars back from overseas thanks to tax reform. I asked Tim Cook if that was going to be changing anything about M&A strategy. Might they consider buying some bigger companies like a Netflix or a Tesla? He pointed out to me we've acquired 19 companies in 2017. That is a company every 2 to 3 weeks. We stay constantly in the market. We look at companies tiny to big. And the key question is always, would it improve the life of a customer? Can it help us build better products? That is how we decide. Corey, what do you read into that?
Well, I mean, I want to go back to your Fortune 300 comment. I mean, that seems ridiculous. Fortune 300, there's a Fortune 500, there's a Fortune. I understand what he means by that, but on the day when they take the time Inc. sign off of a building and he's still pointing to lists that don't exist anymore, there is no Fortune 300 list. And I think that the cherry picking to try to dress up these results as being a little bit better is stretching a little bit. Apple sold fewer phones after the biggest release they said that they've ever had. They sold fewer phones than they did a year before when they didn't have such a big release. Meanwhile, and certainly some of that's got to be about price. They charge a lot of money for this phone. They brought in a lot of money for this phone. The revenues are fantastic. The profits are fantastic. The free cash flow is fantastic. It's all the things you expect from this behemoth of a company. But the success of the phone is tepid. And so, the success of the watch business pales to the phone because the phone has such a historically amazing growth rate and size of the business here. But fundamentally, it's going to be about the phone sales going forward. And I think the reduction of the guidance for the next quarter in terms of revenues, so much below what Wall Street had been at, and so much what Wall Street expected in terms of growth, based on where Apple had sort of directed them. I think it really shows that Apple's up against it a little bit with this expensive phone.
Right, but Julie, how much does it matter that upgrade cycles of the phone are getting longer if indeed they're bringing in still record amounts of money, and that money is coming in from different parts of the businesses? Maybe it isn't so much as it was in the past coming from the phone, but it is coming from services, and it is coming from Apple Watch and the HomePod, which is just about to be sold in a few days.
Yeah, and I think that's really important. It's not just, I mean, certainly the smartphone is the biggest chunk of their revenue, but they are creating more devices. Their services revenue continues to grow as a percentage of the total revenue. But I think one of the other things that you're running up against here is traditionally hardware has been sold based on like the size of the screen, how many pixels, how fast it is, how shiny it is, and things like that. And it's getting harder for consumers to differentiate between these devices. What's becoming more important is the experience on the phone. Right? Today's experiences, we may think they're awesome, but there's a long way to go. They put a lot of cognitive load on consumers, and the things that are going to make experiences on smartphones better over time are going to be very subtle, and they're going to be very hard to communicate to consumers because there's a lot of artificial intelligence or machine learning involved here, and it's going to be very subtle as consumers realize that just using the phone has gotten a lot easier and it's a lot better experience, but they can't really pinpoint why. And so I think it gets harder to sell consumers on these new price points, even though these devices are amazing and they're getting better. And then you go back to things around the ecosystem, the number of devices I own, my switching costs get higher, and certainly the value of this device is also tied to the services. So it's getting harder, like the message is getting harder.
Got it. Julie Osk, Forrester Research Analyst. Always great to have you here, Julie. Thanks so much for breaking it down. Corey Johnson, our editor-at-large. You are sticking with me throughout the show. Coming back, we're going to be talking about Amazon. Jeff Bezos saying he wants to double down on Alexa. We'll have more on that next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. We are talking now about Amazon earnings. Amazon having its strongest holiday quarter since 2009, mostly fueled by e-commerce and cloud computing. Jeff Bezos saying he wants to double down on Alexa. Back with me, Corey Johnson, our editor-at-large in New York, as well as Crawford Del Prete of IDC Research. Corey, I want to start with you. Break down Amazon earnings for us. What do you think the highlights are?
Well, look, we just spent 10 minutes talking about how Apple is trying to make the iPhone X work better, how they're lowering guidance, how they sold fewer phones in the quarter, how the phone might be too expensive. And now we're talking about Amazon, where the biggest success story in these results is what happened with Alexa and how Alexa has become this giant platform with over 30,000 skills available. How, as you mentioned, Jeff Bezos said in the press release, they're going to double down. And that we are at this really important inflection point where the most important device in the world, in the iPhone, well, I just talked to Scott Galloway on Bloomberg Radio, and he says this is the moment. This is exactly right now, today, the most important moment in technology we've seen in a decade, where the leader in technology is no longer Apple, and now it's the Amazon Alexa. And that this inflection point is so important because computing is moving from the phone to voice, and Amazon owns it, and Apple blew it, and you can see it in the results that both companies announced today. And you know, the open platform, the Apple-like platform, with open to multiple developers and also to multiple hardware developers. Look at what Sonos is doing with the Alexa, for example. That Amazon is reaping the benefits of this. Amazon is getting services revenue already in the ways, you know, 2/3 of American households are Amazon Prime members. Amazon Alexa is part of that ecosystem. They're already in the place where Apple says it wants to be.
I did have a fairly long conversation with Tim Cook here about the HomePod, which is now out to the public in a matter of days. And I asked, do you think you missed a category that you let Amazon get away with that you really should have led? And he said, I think quite the opposite. I don't think we missed anything. And he talked about this idea that a personal assistant, really the #1 personal assistant, is your phone, and they have Siri there. And their conception of HomePod is really much more as, yes, a personal assistant, but more importantly, as a music and audio device. Well, look,
I mean, they missed their release date. They missed their own release date. Yeah.
History still has yet to be written. You know, we don't know how the HomePod is going to do. So I want to bring in Crawford on this. Crawford,
Sure.
What do you think? Do you think Apple missed it? Can they catch up?
Yeah, so look, to Corey's point, Alexa's got over 4,000 home-connected devices now in their ecosystem. So has Apple missed it? Apple may not have missed it, but boy, they sure are looking at taillights going way over the horizon. They're going to have to do one thing, and that is attract massive amounts of developers to their platform to pay attention to HomePod and to really then go out and do all the missionary work to get people onto this platform. I mean, I just want to add one thing to what Corey said, and that is that AWS grew 45% in the quarter. As AWS gets stronger, it's a platform that brings developers in to enable things like Alexa. So now they're into this virtuous cycle that just gets stronger and stronger and stronger and stronger. And that's a pretty big moat. Is it unassailable for Apple? No, nothing's unassailable, but Apple has got a heck of a lot of work to do in order to close a gap.
And just for viewers just turning in right now, we are listening to the Apple call. The earnings call is underway. Tim Cook's on the call right now. In fact, he's talking about service revenue. To your point, Crawford, he says they're going to double service revenue by 2020. I think they put up $4 billion in the quarter, so it was an impressive quarter in the other category, which services is a part. But you know, to your point, I mean, you know, Amazon's business here, web services does fantastic, but they're also learning through web services about what everyone's able to do on the web. And this notion of a completely hardware-independent, distributed service business in the world of technology, separate from selling people lots of stuff, dropping off lots of boxes, these guys are clearly the leader in it and growing at a fantastic pace and throwing off a ton of profit.
Yep.
So Tim Cook told me, look, for what it's worth, we already have a personal assistant in 1.3 billion people's hands, and that is the iPhone. Moving on, though, let's talk about the cloud, you know, because we're going to get into that with Alphabet results coming up. Corey, you know, dig into the AWS numbers for me and just simply how quickly this business is growing.
So it's growing at a fantastic pace at a really large scale. And what we see, I put a couple of charts together that kind of show what's happening at AWS in terms of just margins. And I mentioned it in passing there, but Amazon loses money basically in the selling of stuff, and yet the margins they put up of 26.5% in the quarter, really terrific and even better than last year in that important fourth quarter. Even for AWS, it's an important quarter because there's a lot of demands on the service from all their other users because everyone's doing a lot more commerce then. But compared to the rest of their business, it drove the rest of the results to a 3.1% profit. So Amazon was profitable selling packages, selling stuff in the US, very profitable in AWS, and lost money in Europe selling stuff. And so the result was they had a really fantastic cash flow from operations business. They got 7% rise in cash flow from operations in a year-over-year business, and that let them sink a lot of money, well, as they always do, into spending and building. CapEx was actually up, free cash flow was down. Why? Because they spent a lot of money building a lot of stuff, so that we're going to see a lot more quarters like this. And it's worth noting that Amazon is not working on the last quarter of the current quarter. Amazon right now is working very hard on a quarter 3 years from now, and these results kind of show what they were working on 3 years ago. Whereas Apple's still trying to get out the speaker product that you're talking about that they announced and that they missed the date of earlier in the year.
Yeah, and Corey, I just want to say that my bet would be. Oh, go ahead. I just want to say my bet would be that those AWS margins expand going forward as they start adding more and more tools that developers can use that guess what they charge for, things like serverless, things like Lambda. But the trick is get the developers in, get people building apps, and then get people when they're managing their instances to use more of Amazon's developed tools. So my bet is that could be a really scalable business, even more scalable than it has been going forward.
All right, speaking of investing, Amazon saying their new headquarters is going to cost them $5 billion. At the same time, the company now expected to bring in $200 billion in sales this year. Crawford Del Prete of IDC, Corey Johnson, our Bloomberg editor-at-large, you are sticking with me. Amazon shares are up. Alphabet shares are down. We're talking Alphabet earnings next. This is Bloomberg.
Google Cloud, which includes Google Cloud Platform and G Suite, has reached meaningful scale, and I'm excited to share today that it's already a $1 billion per quarter business. We believe that Google Cloud Platform, based on publicly reported data for the 12 months ending December 2017, is the fastest growing major public cloud provider in the world.
Google CEO Sundar Pichai there talking about the growth of the cloud business. The Alphabet earnings call happening right now. We are live in Cupertino, California, breaking down Alphabet earnings, some of the headlines. Alphabet naming John Hennessy chairman. This after Eric Schmidt stepped down, though Schmidt remains on the board. But shares are down after Q4 profit missed estimates due to higher marketing expenses and troubles at YouTube. Corey Johnson, our editor-at-large, still with us, along with Crawford Del Prete of IDC. Crawford, how are you looking at this Alphabet miss here?
I mean, the bottom line is that I think that the other parts of the business are just costing them too much. The expenses grew faster than revenue in the quarter. So what you see is that while some of their new efforts are making great progress, particularly the clip you just showed, or the clip you just played about their cloud business is growing. Their cloud business is starting to get to scale. But it's, they are the number 3 right now in a 3-horse race. And they really need to do a lot of work in order to get that business to contribute on a scale that's going to allow them to not only continue to grow, but pay back some of the investment that they've made in that business, which is kind of still what you're seeing in the numbers. Now, obviously, there's other spots of the numbers as well. YouTube has had a very tough year. I think they still have to consolidate some of the other businesses where they've been kind of making their other bets. But the bottom line is that the business hasn't scaled the way they needed to, and I think that's why you saw the miss.
I also just got off a call with Alphabet CFO Ruth Porat. We talked about how the shares were down, and she told me we're really proud of the ongoing strength of the business and overall revenue growth across all regions. We're staying focused, as we always have, on long-term investing for the businesses, and intra-quarter variability will be what it is. Corey, how concerned should we be?
Well, I don't know if we should care at all, but I don't know how concerned should Ruth be. I don't think terribly. I saw some things sort of within the numbers, deeper into the numbers, that looked reasonably positive for the company. And the two things that, I'm no genius for tracking this stuff, but the two things that I think are the most important metrics outside of obviously the generation of free cash flow, but is the click growth and the value of a click. And what we saw from the click growth, that is how many times people are clicking on ads, both at the Google sites and the other sites that Google powers ads for, it grew faster than last year, a little down from what we've seen in recent quarters, but 43%, that's better than the 36%, and that's in a year-over-year change, better than the 36% growth of a year ago. I think that's pretty good, but more encouraging, and then maybe I'm looking for good news here, and I shouldn't really care, but we like Ruth. If you look at the devaluation of the ads, right? As ads have gone to mobile, users pay, or marketers are paying less and less and less. Unlike Facebook, where marketers are paying more, the price per click, the value per click, how much the marketers are willing to pay. They don't tell us the number, but they show us that the number's not getting appreciably worse. It was down 14% year over year, but that's less than recent decreases we've seen, and I'm sure they're hoping at Google that decline will stop.
All right, Corey Johnson, our editor-at-large there, Crawford Del Pret of IDC. Thank you both so much for joining us. We're going to continue to watch those Alphabet shares, follow all the headlines, and bring them to you as we have them coming up. We're going to have more on Apple. We've been listening into the call. Tim Cook speaking. More about Apple coming up. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang, live in Cupertino, California at Apple Park, Apple's brand new campus. They have been moving in here over the last several months. This will ultimately house 12,000 Apple employees. Apple reporting its first earnings report from this new campus, and I did get to sit down with Apple CEO Tim Cook for a fairly lengthy conversation. We are also monitoring Amazon and Alphabet earnings. Amazon shares up, Alphabet shares down. Apple shares up. Of course, all the focus is on that iPhone number. 77.3 million iPhones sold in the quarter. Average selling price $796. Record-breaking revenue, $88.3 billion in revenue this quarter. I'm joined now by Alistair Barr, our Bloomberg Tech editor in San Francisco. Ali, I know you've been digging into the numbers. What are the highlights as you see?
I think it's all about the iPhone X. At first, we thought the numbers were not very good, and there was a weak forecast for the current quarter. But when you look at that average selling price of almost $800, that implies that when shoppers are buying an iPhone, they're buying the top one, and that's really Apple's goal for this quarter.
That's something that Tim Cook did emphasize in our conversation, that the iPhone 10 has been the most popular iPhone every week since it launched. And, when I asked about the questions, well, it's slightly below estimates. People have been concerned how well it will sell, given the price tag. He pointed out that, the iPhone is still the top 5 selling smartphones in China, same in the US. In Japan, the top 6 out of 7. So he said he feels great about it. But still, the reality is that the upgrade cycle is getting longer and longer. What does that mean, Alistair, for Apple long term?
Well, if you look at the total iPhone sales, they weren't that great, and so the implication there is that overall demand for smartphones in general and for iPhones is not that great. So if you think about it, selling a more expensive phone, unit sales don't grow quite as much, but actual total revenue will grow. That's a great strategy, and for the moment it looks like it's working. You also have to bear in mind that the iPhone X has a lot of Apple's latest software features in it, like augmented reality. That's where they want to go, so the more people that have the iPhone 10, the better for that strategy.
Also, of course, the HomePod coming out in a few days. The release was delayed. A lot of talk about whether they've missed the market, a claim which Tim Cook would dispute. What is the outlook, Alistair, for the HomePod?
Well, the total iPhone number is very, very important when you're talking about how many accessories Apple is going to sell. So the more iPhones, doesn't even matter whether it's an iPhone 10, the more iPhones that people have, the more likely they're going to buy a HomePod rather than an Amazon Echo or any other smart speaker. So there's an uphill battle there. But also you have to remember that most Apple customers are very, very loyal. So that maybe could give the HomePod a chance next holiday. It wasn't great that they missed this holiday for sure.
We talked a little bit about M&A, and of course Apple is bringing it back that billions and billions of dollars back in cash from overseas due to tax reform. They've talked a little bit about how they're going to reinvest that. But I asked, what does it mean for their M&A strategy? Would they consider buying a bigger company like a Netflix or a Tesla? And he said, we are always in the market. He pointed out that they bought 19 companies last year. That's one company every 2 to 3 weeks, and that they look at companies big and small. They're continuing to look at companies big and small and always asking the question, how does this add to our portfolio? Does this improve the life of our customers? Apple historically hasn't made huge acquisitions, Beats being by far the largest at $3 billion under Tim Cook. Do you read anything into Tim Cook's remarks there, Ali, that maybe the strategy is changing?
Yeah, I think it's an important comment that they're bringing all this cash back to the US, so that's going to make it easier to put that to work in M&A. Also, if you look at their strategy going forward, they need another big hit. Areas like transportation, self-driving cars, and also other areas, especially in the entertainment area with streaming video. They have a lot of work to do in those areas, so a big acquisition would help them in those areas.
They have been investing heavily in original content and bringing on new talent. Of course, we're continuing to monitor the Apple call. Alistair Barr, Bloomberg Tech editor, thanks for breaking it down for us. Coming up, we're going to be talking about PayPal. Earlier today, I sat down with PayPal CFO John Rainey. We talked about the big news of the day, eBay transferring its primary payments business to a competitor. We'll be right back with PayPal after this quick break. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang, live from Apple Park, Apple's headquarters in Cupertino, California. Moving on now to PayPal on the back of PayPal earnings yesterday. The big news, of course, today that eBay is transferring its primary payments business to a competitor away from PayPal. I sat down with PayPal CFO John Rainey. I asked him what this means.
The main takeaway from this is that this is a natural evolution of our partnership. It is the next chapter, if you will. And for us, this was completely anticipated, completely built into our financial plans, and does nothing to change our long-term earnings growth potential.
The market didn't anticipate it, however, and there's concern about how it will impact payments volume and how you'll replace that. So how much of PayPal's payments volume comes from eBay, and how do you intend to make it up?
So today, eBay is 13% of our total volume, and it is the slowest growing part of our business. If you go back and you look at the 10 quarters since we separated from eBay, the average revenue growth for our eBay part of the business is 4%. The rest of our business has been growing at 23%. And so if you fast forward to the end of the operating agreement, you can see that they would be a much, much smaller piece of our overall business. But there's a couple key points relevant to what was announced yesterday. First is that we will still be a part of eBay's business. We have a term sheet for a 3-year extension where the largest part of the business that we do with them today, the branded processing, will continue to do that. Importantly, that's the most profitable part of the business. There are two other things that I think are relevant. One is that this allows eBay, as you said, to go partner with someone else. Large marketplaces the size of eBay, most of them already do that. So this is a natural extension. But very importantly, it allows us to go out and partner with some of eBay's competitors, some of the largest and fastest growing marketplaces in the world, with unfettered ability where we haven't had that before.
So let's talk about profitability here, because there is concern about the profitability of eBay transactions on PayPal. How will this impact PayPal's profitability?
Yeah, so we don't believe that this is well within our plans. And as I suggested, we continue to grow these other faster parts of our business, and we believe that this doesn't do anything to change the profitability profile after the operating agreement versus before. When will we be able to buy things on Amazon via PayPal? Well, we'd love to be able to partner with all the large marketplaces in the world. To the extent that we have unfettered ability to go partner with many marketplaces after that, hopefully we can do something there. How
has tax reform impacted your forecasts and desire for M&A?
Yeah, so we're a global company, and we generate a lot of our cash flow offshore, so tax reform is an unmitigated benefit for us. We will actually see our effective tax rate stay in the same range that it has been. We gave guidance yesterday of 17 to 20%. Our cash taxes will actually go up slightly, though, because of the so-called GILTI tax that will be imposed internationally.
This means you have more flexibility for M&A. What might you be interested in? Bill payment, cross-border, lending?
All of the above. So I would say there are two sort of categories that we look at in M&A. One is expanding our geographic footprint. We're a global company. We're in over 200 markets across the world. We'd love to be bigger in some of those markets. But to your point, there are a lot of complementary services to payments like bill pay, like international money remittances that are good for our customers and tuck in really well to the platform that we already have.
PayPal CFO John Rainey there earlier today. I want to get now to Corey Johnson, our editor-at-large in New York, with more on Alibaba earnings from this morning. Corey, take it away.
Emily, appreciate it. Alibaba, big day. They kicked off our big tech day, of course, and failed to impress. The company's gross margin slipping. Monthly active users rose just 18% in the fourth quarter. Alibaba also announced the restructure of Ant Financial. It was an interesting deal. They dropped their profit-sharing plan with the company. Ant Financial runs Alipay. Instead, they're just going to take a 33% of the business and stop taking cash. For more, Kevin Carter joins us now, the founder of EMQQ. It's an emerging market internet and e-commerce index. Alibaba, of course, is a big part of that. First of all, tell me about how big is Alibaba to your index? How heavy in your index is Alibaba?
Sure. Hi, Corey. It's the largest holding. I think it's about 9% today, and it and Tencent are sort of neck and neck, and depending on when the rebalance was, you'll find them almost always at the top in terms of largest positions. And
you're in an interesting position where you've got a lot of Alibaba, but you maybe don't care if it goes up or down. You just want it to reflect what's happening in the index. So these kind of confusing transactions where economic value is being passed, but cash is going to stop being passed. Maybe you can help explain what's happening with Alibaba giving up cash payments from Ant Financial, and Ant Financial is handing over a third of its equity.
Well, I haven't had the chance yet to dig into the details of it, and as has been noted, the original relationship between Ant and Alibaba has been a complicated relationship, and that really is part of the Chinese regulatory environment about ownership of certain financial related entities. So either way, it's still a big deal to them, and the online payments is really part of the entire story of Alibaba, obviously.
Certainly. Currently with Alibaba, what's more important for you? Is it the advertising business or is it the e-commerce business?
Well, the e-commerce business is the business, the largest and the most profitable piece, and contributed over $7 billion of EBITDA this quarter. So that's the bread and butter, and it will continue to be so, and it will help fund a lot of the other initiatives that you're seeing.
Right, but isn't most of the revenue from Taobao and Tmall actually advertising, not actually e-commerce itself, but just advertising on the site? Not, money's money, but it's not actually shipping of goods. It's advertising about those goods.
It's a meaningful part, and one of the stories we saw today is, in fact, that advertising spending by Alibaba now exceeds R&D spending. So yes, they generate revenue from multiple sources, but it's people going on their phones. As someone said last month, you have 1 billion Chinese people walking around with a shopping mall in their pocket, and so it's a combination of margin made as the middleman between the goods manufacturers and the buyers, and also advertising.
Yeah, again, if the majority is advertising, not the shipping of goods, the story starts to look a little different. But it's an interesting one, certainly. And it does seem that all of this M&A for this company is when you read the financial filings, you read the 10Ks and even the Qs, you read about all these deals that they've done, not all of which have been accompanied with press releases. And it does seem that trying to follow what's happening in terms of mergers and acquisitions and who's buying whom and when, and now the Ant Financial thing, it really is a moving story.
Well, it is a moving story. The Ant story is obviously pretty significant in size. But between Alibaba and Tencent, these guys have been prolific investors into other internet companies. I mean, between the two of them, they have well over 200 investments, and some of them are of some significance. I mean, you have both of those companies are investors in Didi, the Uber of China, and that's part of the nature of their business. I mean, in some ways, they're both internet companies and venture capital firms. I mean, they've been much more prolific than their sort of American counterparts in terms of investing in, tertiary-related businesses. And there's a lot of acquisitions of those companies. A lot of those companies have gone public and then later been acquired, like Youku Tudu, for example. So it's definitely part of the story and part of the businesses.
Kevin Carter from EMQQ, thank you very much. We appreciate your time.
Thanks, Corey.
All right, well, still ahead, we're going to dive back into some other big tech companies reporting. We mentioned Apple, Amazon, Alphabet. More to come on all those. The CFO of Apple, Maestri, Luca Maestri, is now on the earnings call right now. He's saying the company's targeting a net cash position down to zero with all those repatriations now possible thanks to the new tax law, or mandatory because of the new tax law. All right, this is Bloomberg.
We estimate making a corporate income tax payment of approximately $38 billion to the U.S. government on our cumulative past foreign earnings. This amount is very similar to what we had been accruing on those earnings in our financial results through fiscal year 2017.
Apple CFO Luca Maestri there on the Apple earnings call, breaking down this quarter's results. Also, Tim Cook talking about this battery replacement issue. They decided to cut the cost of a battery so users could more cheaply replace them in the midst of Batterygate. He said on the call, "We did not consider in any way, shape, or form what it would do to upgrade rates. We did it because it was the right thing to do for our customers." Corey, in our meeting, Tim Cook told me that, yes, there are agencies around the world asking questions about this. They are cooperating with those agencies, but of course, the concern here is, what does this mean for upgrade rates, over the longer term, not just right now?
Yeah, and I think that there's an issue of customer trust, too. Do your customers really feel like, you talk to people all the time who say, they made my old phone slow. Apple was throttling the speeds in the phone to try to make me buy a new one. They were making my old device seem like an old device technologically. I think those things matter, and I think Tim Cook really knows that. I wish every CEO talked like Tim Cook. But you want to see that in the behavior too, and I think the customers have some questions about what's gone on there. When that can hurt Apple when people are deciding what other products to embrace. Do they want to become a purely Apple home when they're trying to sell this? The speaker device we're talking about, that they really want to have a bigger role. Of course, every company does. But you look at Amazon having great success there, and Apple not, and I'm sure no one's noticing that more than Apple.
And, he told me that everything they've done, in this situation is simply to improve the customer experience. For what it's worth, there was some discussion on the call about tax reform and the cash that they're bringing back. Yeah. What would you highlight there? I heard those comments from Maestri as they came out of the break, and I thought, wow. I thought my tax bill was bad. That's pretty bad. A couple $100 billion. The thing that I'm struck by this is maybe the broader conversation when people in Washington are sort of saying, hey, they're putting their vote in America and bringing all this money back. Well, they're going to be taxed on this money whether they bring it back or not. So the notion that it's a vote for America, Apple's, of course, is a big supporter of America and American jobs, but they're being forced to do this, and that's why they're doing this. They've been asking for a better way to bring this money back, and they're getting it. But it's not like they have a choice in the matter the way this new tax law is written. Alphabet and Amazon calls also underway as we speak. They're all just about wrapping up. I know you've been toggling between all of the live blogs and the headlines. What are some other things that you'd pull out? I mean, I just think my big takeaway, and again, kudos to Scott Galloway from NYU and from his terrific book, The Four, talking about the companies that are changing technology and talking about all the companies we're talking about today, that this really does seem like a seminal moment when you see the great success. Apple should have owned voice. Apple had this product in Siri was like nothing we'd ever seen before, and maybe always imagined in technology. And yet, with the Alexa and with an Apple-like approach, with open for design on both software and for hardware, not even Apple
like, but really opening up a platform to try to drive services and a commerce business through these speaker-like devices of all sorts, whether it's made by, I've got the Sonos at home, I've got the Echo at home, I've got the Echo Dot at home. I believe your house is surely littered with this kind of stuff. They've had a really terrific success and a great consumer experience, and they are the fact that Amazon says they're going to double down here, literally in the same hour that Apple's saying they're not going to sell as many phones as they had expected and not going to have the revenues that Wall Street expected in the coming quarter, is really striking on the face of it, that there's really sort of different directions going with these two massive and massively successful technology businesses.
We use Alexa for knock-knock jokes and music. So,
yes.
Yes, Alexa very, very much
I love Jeopardy.
In our home. Corey Johnson.
That's a big one. My girls and I play Jeopardy every
I haven't
weekend.
tried that one.
It's a fun one.
That's something I do want to try. All right, Corey Johnson, our editor-at-large in New York, thanks so much for breaking it all down for us. I do have one more thing that I want to talk about. My book, Brotopia, Breaking Up the Boys Club of Silicon Valley, is coming out next week, Tuesday. I'm so excited about this. This is something I've been working on for the last 2 years, about how and why women have been left out of the greatest wealth creation in the history of the world and what we can do about it. We're going to have some special coverage all week long next week, diving in to these issues. I can't wait to share this with the world, and I look forward to hearing what all of you think. Thank you so much for tuning in. We are live from Cupertino, California, Apple Park, Apple's new headquarters, breaking down Apple, Amazon, and Alphabet. That's all today. From here, we'll be back tomorrow.